All right, good morning, everybody. Hopefully, everyone is doing well. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Welcome, Drew. Welcome, Jay. Hopefully, you guys are doing well. If you guys can hear me out there, let me know in the chat, in the comments. We are both live on Facebook and over on YouTube, so welcome, everybody. Hopefully, everybody's having a good morning so far. This market has been pretty ugly so far here today. It's been up and down and trying to make up its mind of which way it's heading, so we've definitely got a lot to cover here. So with that, welcome once again. My name is Patrick France. I'm a senior instructor here at VectorVest. Every single Thursday, we go live talking about the VectorVest Stock Advisory app. The VectorVest Stock Advisory app, if you're not familiar with it, is one of the most comprehensive trading apps to help you not only know when to get in the market and when to get out of the market, but also know what stocks to buy, when to buy them, and find out what they're really worth. Good morning, Kathy, tuning in from St. Paul. Glad you could be here this morning. Hopefully you're doing well. And so what we're going to be looking at is how to really utilize the Stock Advisory app and make it as simple as possible to manage your stocks as fast and as quickly and as efficient as anywhere else out there, actually faster than anything else out there. And that's going to be exactly what we're going to be focusing on today. I'm going to show you guys about a 5-minute plan that will help you be able to utilize the mobile app to consistently make money, manage your portfolio, and not have to spend hours upon hours managing a portfolio. You know, I know from personal experience, it can take quite some time to go through baskets of stocks and then try to find new stocks and then look up different articles to find potential candidates to get into. And luckily, VectorVest is your one-stop shop to help simplify it, make it easy, and not have to spend those hours upon hours to manage your portfolio. I agree, Lewis. The markets have been quite fickle. Maybe in a little bit, maybe when we get towards the end, I'll talk about my thoughts on it. But for now, let's take a look at what's going on in the market. As always, we always start off taking a look at what's going on in the market here today, and then we'll jump into our topic of discussion. And then as always, at the very end, we'll save the fan favorite for you guys, where we'll analyze any stock that you want to take a look at in less than 10 seconds. So if you're here to get your stocks analyzed, see what they're really worth, see how they're valued, make sure to stick around towards the very end. We'll analyze those for you. All right. It'll turn around. Yeah. So some stocks may, but overall markets don't look so great. All right. Hey, Chris, hopefully you're doing well. So with that, let's jump into it here today. Right now, we are 2 ticks into the red. Therefore, the color guard is somewhat bearish, and VectorVest does not advocate buying any stocks at this time. If we scroll down a little bit, we get to the color guard and we see where those 2 red lights are coming from. So when we look at the color guard, we get 3 categories here. We get the price, which is based upon the price of the VectorVest composite. Now, the price of the VectorVest composite is an arithmetic indexed average of about 9,000 stocks that we currently track in the US market. Give me one moment here. Just getting things set up a little bit better for us. There we go. Awesome. So when we look at the price of the VectorVest composite, we get an idea on the overall sense of the market, because it's not just looking at the Dow's 30 or the Nasdaq's 100 or even the S&P's 500. It's looking at about 9,000 stocks, so we get a better representation on what's actually occurring in the market. The next indicator is the RT, or relative timing. Now, the relative timing is looking at the short-term price trend of the VectorVest composite, and it's cast on a scale of 0 to 2. So at 1, the short-term trend would be neutral. Anything above 1 would show an uptrend. Below 1 would show a downtrend. As we can see, looking over the last week, we can definitely see that trend of the market starting to turn down and picking up steam as we speak. Next indicator we look at is the BSR, buy to sell ratio. Now, the buy to sell ratio is looking at the number of buy rated stocks in a database and comparing it to the number of sell rated stocks in a database. And this gives us a sense on the overall market health. So if there's more stocks with a buy than a sell, then the buy to sell ratio would be above 1, which would indicate overall market strength. Now, if it's below 1, like it is now at 0.92, that would indicate more sells than buys in a database, or overall market weakness. The fourth indicator we look at is the MTI, or the market timing indicator. So this is a combination of the price, the RT, and BSR to analyze the underlying trend of the market. So this is going to be cast on a scale of 0 to 2 once again, and above 1 would show the underlying trend is up. Below 1 would indicate the underlying trend is down. So at 1.17, the underlying trend is still up, but we look at the overall trend, it's been moving lower day over day and week over week. So that kind of gives us a sense of what's going on right now. After the MTI, we then look at the trend column. So the trend is looking at 2 different aspects. It's looking at the primary wave, which is simply the short-term or weekly trend of the market. It's also looking at the underlying trend of the market, or the MTI. So right now we do remain in a down-up situation. So the primary wave, or the weekly trend, is up, but the underlying, is down, but the underlying trend is still up because the MTI is above 1. Can we use VectorVest for Canadian stocks and tax also? Yes, we do have the option to look at Canadian stocks. If I tap on here, We have US, Canada, Europe, UK, and Australia. So getting back into it, give me one moment here. Had to re-sign in. All right. So after the trend, we then get the calls column. And the calls column stands for our confirmed calls. Our confirmed calls are our most conservative timing system here at VectorVest. They're our last signal we get to get into the market and our last signal we get to get out. Therefore, we never want to ignore a confirmed call change. Right now, because it is more conservative, we still remain in the confirmed up situation, but pay attention to this going forward. If the markets continue to soften as we've seen over the last week or two, we could see that confirmed up call turn to a confirmed down very soon, and we don't want anybody to get caught off guard. So that's why we strongly urge all of our subscribers out there to watch the daily color guard report found right here under the market guidance section. Now, if you're not already a subscriber to the VectorVest Stock Advisory, you can click on the link down in the description below and sign up for a 2-week free trial, and you can put it to the test and see how powerful the tools can really be for you. So if we scroll down, as always, we want to take a look at the advanced declines. Every single day we like looking at the advanced declines, and what we're looking for is at minimum a 2-to-1 bias. So the markets are moving lower today, therefore we want to see twice as many stocks declining than advancing to know if we should be looking at getting into a short position or a contra ETF as a hedge. And right now we have 22% of stocks moving higher and about 67% of stocks moving lower, clearly meeting that 2-to-1 bias, actually closer to a 3-to-1 bias. So therefore, if you're worried about what's going on in the market, you were wanting to open up a contra ETF or some sort of a hedge like we talked about last week, this could be a good day to be potentially doing that because you have the wind to your sails. So if we scroll down, a little bit more, we get into the daily or the major indices where the Dow is down about 0.5%. The NASDAQ is down about 0.1%. S&P is also down about 0.1%. VectorVest Composite down about 0.6%. So the Dow is really pulling the overall markets lower. Throughout the course of the morning so far, we've seen the NASDAQ go from green to red to green back to red. Same with the S&P. So right now, things are really looking weak in the overall market, and we definitely want to be cautious about that as we move forward. All right, so with that, let's go ahead and jump into our topic here today. What we're going to be doing is walking through a 5-minute plan to help you manage your portfolio. So before we even start to do this, I want you guys, if you guys have stocks you want to get added into our example portfolio, let me know what stocks you guys want to see added into the example portfolio in the comments or in the chat there. And while I'm doing that, let's go ahead, pull up the VectorVest watch list or my watch list. And what we'll go ahead and do is add a new watch list. And I saw a couple of stocks coming in earlier, so we'll type in plug. See what else? Lucid, LCID. Go back up here. Good morning, AJ. Hopefully you're doing well. Facebook, FB. What else do you guys want to see in here? Apps, APPS, UEC. UEC, there we go. AXON. AXON, let's go. QS. AMD. GPS. MIME, there we go. EXROF. FUBO. And we'll add a couple more in here just to say, or just for safekeeping there. Got mine already in there. Fuel cell, FCEL. And keep in mind, I'm not going to be analyzing every single stock in this list. We're going to be using this as an example portfolio here today. So that way everybody has a good idea of what we're going to be looking at and knows exactly, that these are not stocks that we're already preloading in here. This is going to be completely on the fly. So you can see, everything that we do with this is METC is going to be is going to be applicable to you guys out there. All right, so we've got that in here. Let's go ahead and call this FBL, Facebook Live. I already have 10 watch lists. All right. Let me go back. I got to delete a watch list. Let's go ahead and delete the one from over a year ago and then create a new watch list. All right, let's get these back in. FCEL, MIME, EXROF, plug, AMD, NVDA. Let's get some more METC, apps, UEC. What else do we have? FUBO. Making sure I didn't miss any. NVIDIA, we got that one in here. HEXO. Hexo, we can add that. Disney, DIS. What else? AMD. TSLA. So I have AMD already in here. I have AMD already in here. AXON. QS. There we go. There's our watch list. So we'll date it 11, 17, 18. Whoops, wrong date. There we go. All right, so we've got our watch list built. This is going to be our model portfolio or our example portfolio here. Nick's coming in and saying, first time, welcome, Nick. Glad you could be here. Hopefully you enjoy yourself. Hopefully you learn something new about the stock advisory to help you perform better in the market and help you take control of your portfolio. All right, so we're waiting for this to get created real fast. For some reason, I was having issues with the Wi-Fi a few moments ago, so hopefully it doesn't take too long. There we go. All right, so here's our watch list. As always, whenever we build a watch list of our stocks in our portfolio, it'll automatically bring the best stocks to the top and the worst stocks to the bottom. So now that we have our watch list built, what we're going to do is we're going to go back to the overview page because that's the very first screen that we see whenever we sign in and walk through the plan of what we're going to be doing or what you should be doing going forward. So let's assume you've been working all day, the markets are closed, you finally get home, you got the kids to bed, you got dinner finished up, you cleaned all the dishes, all of that, and now it's time to get to your portfolio, see what it's doing, manage it from on a nightly basis. So in 5 minutes, you should be able to manage your entire portfolio, and that way you can free up time to get back to the spending time with family, friends, that kind of stuff. Does this model have a limit on the number of stocks? No, not what we're looking at here, but nobody, I'm giving a realistic amount of stocks. There's 15 stocks in that. That is a lot of stocks to manage, personally, but everybody's different. And so this is going to be a good example to go through. All right. So first and foremost, you come home, you're done with the night, or you're done with, getting the kids to bed, all that stuff. And now it's time to manage our portfolio. So we pull up the app, we sign in. First thing we look at is take a look at what's going on in the market. Right now, the color guard is somewhat bearish, so therefore, once again, VectorVest doesn't advocate buying any stocks at this time. That was as of last night, or that was as of the night, or the close of the market today, so therefore, that's our guidance for tomorrow's morning. So at this point, we're not really worried about going ahead and looking for new stocks to buy, which we'll cover that in a few moments, but right now we know. All we need to do is keep an eye on our current holdings, make sure anything that has changed can be managed and can be followed and that we're aware of it. So we're not going to be worried about buying new stocks. We take a look at the color guard real quick. 2 red lights and the RT buy to sell ratio. Take a quick look that they are lower day over day, week over week. MTI is dropping. We still remain a confirmed up call, but primary wave is down. So therefore we are seeing a little bit of weakness, telling us to be defensive in our portfolios. Okay, so there's our quick recap. 30 seconds just to briefly go over the homepage, and then we move into our stocks. From here, we go back to the watch list. We come down and open up our watch list of our stocks that we currently hold. And this is, remember, at the end of the day. So we're looking at our basket. Top stocks that we see here are the ones that we don't have to worry about that much. These are the ones that are performing the best, helping our portfolio move higher. So therefore, our worries are not going to be with our top performers. Our worries are going to be with the lower end of our performers. So what we do, simply click on the sort at the top, sort by RT. Resort it into descending order. And these are the stocks that are hurting our portfolio the most. If you recall from a little bit ago, the RT is the short-term price trend of the stock or the market, depending on where we're looking at it here. Right now we're looking at the stocks, so therefore it's pertinent to the stocks. With the RT is below the level of 1, that shows the stock is in a downtrend. Another way to think about it for an individual out there is that not only is it in a downtrend, but it's losing us money. And as we know, it doesn't make sense to hold on to stocks that are losing us money. So therefore, that's where we go through. We find our first stock, starting off with the worst performer and moving it through. And this is like what we like to call weeding the garden, if you will. So we come down here, start out with Hexo. Hey there, Jeff. Hopefully you're doing well this morning. Glad you could be here this morning. So looking at Hexo, we see okay long-term potential, but does have a lot of risk. Most likely we wouldn't be sitting into it at this point. But if we were, with the RT of 0.22, it tells us it's falling like a rock. It's not making us money. It's losing us the most money out of our whole entire portfolio. So therefore, maybe you'll take a quick look at the graph, see it. Okay, we're about to hit a new fresh low. I don't like what I'm seeing. The stock has been moving lower for the last 6 months, pretty much for the last year. So therefore, that tells you right then and there, I need to be getting out of that position. Instead of sitting around and using a trading plan of hoping and praying, follow a systematic approach. Whenever you get into a stock, as always, you should know exactly where you're going to be getting out of it. Some typical rules, just as a side note for you guys out there, some rules of thumb to follow is 1, set yourself a target, first and foremost. A lot of people don't do this, and this can really come back to bite you later on, especially when you have a stock that has a really good gain in it, and then you think, oh, it's going to just continue and continue, and you've never set that plan out ahead of time. You end up letting that gain start to diminish and then end up turning into a loss or taking a very small gain where, let's say you had a 30 or 40% gain. Now you're only taking 5, maybe 10%. So you're really missing out on great opportunities. So set yourself a target before you ever get into the stock. Second rule of thumb is set yourself a limit of loss, a loss limit. How much is the most you want to lose in that stock before you finally say, hey, I've had enough. I need to get out. I need to cut my loss, move on. So one rule of thumb is the 1% rule. Simply put, you never want to lose more than 1% of your overall portfolio value in any individual position. Therefore, let's say you had $100,000, you split it up into 10 stocks evenly. You would have a 10% stop on each individual stock, because a 10% stop on each stock would equate to 1% of the overall portfolio value. Obviously, you could do less than this, but no more than that 10% or that 1% overall value of your portfolio. And then the third rule of thumb, as we've talked about many times in the past, is the 50% rule. So anything over a 10% gain, never give back more than 50% of your profit. Therefore, if it goes up 10%, what you want to see is, or if it goes up 10%, if it starts to pull back, let's say to 5%, you're going to lock that 5% in instead of sitting around seeing what it continues to do. Lock that 5% in, take your money, and then move on. You can always get back into it at a later time, but at least you're guaranteed to lock that gain in instead of letting it turn into a loss. Should you always hold onto a Microsoft, Apple? Todd, as we've seen many times in the past, even the best stocks can go down in a down market, or even the best stocks have pullbacks and have times where, they go out of favor for a while. That's happened to Apple for a while, many times over the last, let's say, 10 years in this bull market. That's happened to Tesla. It's happened to a lot of the big names. So, it's up to you personally. I'm more of a fan of taking that profit and then, waiting until it turns back around, or waiting until it starts showing signs of life and then maybe jumping on at that point. But that is the beauty of compounded rate of return. And so therefore I would personally take my profits whenever I have really good gains in them, and then buy back in after a pullback. And that way you can buy more shares with some of the profits that you had from the initial trade. Just my personal opinion, but everybody's different. Depends on what your investment preferences are, how much you like to be trading, how much you want to be trading, all of that there. All right. So now we've covered that. Hexo, I think we could all agree. That would definitely be out of our portfolio. FUBO, another one. Looking at it, RT of 0.45 tells us it's in a really strong downtrend. The stock hasn't really gone anywhere. It was moving sideways over the last 6 months or so and now starting to trend lower again. So therefore, this one doesn't make sense to be holding on to. So we're going to go ahead and delete that. And anytime you come into your portfolio at night and you see a stock that has a sell rating, that's the first stock that you really need to be focused on. Because by the time a stock hits a sell, that's VectorVest's final notice to you as an individual that you either need to sell now or hold at your own risk. Most likely, if you're following those rules we just talked about of utilizing stop criteria such as a target, a gain, a maximum loss, the 50% rule, if you're following those rules, you'll never have a stock get to that sell rating unless something comes out, some news, some scandal or something, and the stock drops overnight, which, could happen. We've seen it happen with many stocks in the past, but is very unlikely. So utilizing stop criteria should allow you to make sure you never have a sell rated stock in your portfolio unless it's for some specific reason. All right. So we see that with METC, apps, Disney. Everybody was talking about, Todd was asking, should you hold on to like a Microsoft, Apple, Disney would be one of them. Look at this. Yes, over the 5 years, Disney's had a great run, but do you want to sit through a drop from, 150 all the way down to 80? Pretty much seeing your portfolio or your position cut in half, only to sit and hold and then see it go to 200? Or do you want to take that profit at the 150 marker, buy in, let's say at 100? And then that way you're able to put more money back into that position and then take advantage of the new run. Same here. You've gone from 200 recently down to 160. Do you want to sit through a 25% drop roughly? Probably not. So therefore, following the rules of taking your profits instead of sitting and letting it ride is not really, or is going to be the more lucrative way of going about it. But that's just me once again. If this was 2007, 2008, if this was March of 2009 when VectorVest and Dr. Delito said, the market's itching to rally. If we see the market running that next week, that is the time to buy in. If this was the bottoms of a market, yeah, I could say, okay, let's hold on to them for a while and, let them develop. But since we're at the bottom of, a bear market getting ready to transition into a bull market, yeah, I could verify, or I could justify holding for a long period of time at that point. But if you recall from an economic standpoint, the bull and bear market cycles typically last every 8 to 10 years. Right now, we're a little over that 10-year period, coming up on 12 to 13 years, if I recall correctly. So, based off the economic boom and bust or economic boom and bust cycles, we are getting closer to that bear market eventually. We've talked about it in the market climate that we go over every single Friday, where looking at the overall market, we're in a stage 4 bull market scenario. That means we're at the end of a bull market. When that bull market will end, nobody knows exactly. We could be in it for a year, 2 years, but at the same time, this is not the stage to get in and just buy and hold and expect it just to continue to go up. So keep that in mind. So Justin, that's one thing that a lot of people talk about is capital gains, and that's why you buy and hold for over a year so you don't have to pay as much tax on it. But at the same time, I'd rather have to pay taxes on money I've made than end up having to be able to write off just a small amount of my losses on money that I've already lost. So, it's risk to reward. Personally, I'm more of a fan of, because if you're paying taxes, it means you're doing the right thing. That means your portfolio is growing. I'd rather be paying taxes on the money I've made rather than, sitting there and just losing a lot of money. So that's my 2 cents on it though. All right. So Disney's clearly a sell. Going to be getting out of that. Getting out any of these that are sells. This is how we free up cash so that way we can reinvest into stocks that'll make us money. So now that we've gone through our stocks, maybe we'll take a look at AXON since it's close. Can you add support resistance lines to your graph? Yes, you can. If you go into the graph, go down to the graph settings. You have support resistance. I don't have it active right now, but you can customize and put your support resistance right here for you. So you can customize those, get those on your graphs, customize your graphs however you want there, Cody. Any financial investing books? Depends on what you're looking for. There's a lot of books that I've read over the years that I would definitely recommend. But, all of them are typically going to be specific to one area of investing. So for options, the options playbook is one of my favorite options tools. I've given it to many friends and family over the years as Christmas gifts. And that's one that I can think of off the top of my head. I'm trying to come up with other ones. What is it? The Stock Market Wizard, I believe, was a great book as well. I was given it by my father. I have a lot of them at home that I've gone through and read. But they're all typically specific on one area or one style of investing. So, it's hard to just say one name as a, blanket book that covers everything in the market. So, if you have specific types of books you're looking for, let me know. I can try to help you out. I put me on the spot there, Shamar. But we can try to find some that can help you out for sure. All right. So AXON, we're starting to see lower highs coming in. We're starting to see the DPO steadily dropping. This is one when we come in, we look at our portfolio at night, we see these patterns coming in. We probably noticed it back here. This is where we start to tighten our stops. If you have a really good gain in a position, you don't want to give that back. So therefore, that's what you're looking for when you notice these, when you go through some of your graphs, and you can do that quickly and easily, which we'll see in a second. But if you notice these types of problems or these types of issues in your portfolio or these warning signs, these are the indications just in a matter of seconds. When you notice that tells you, hey, right now I have, let's say a 20% gain in it. Maybe just in case it doesn't continue to move higher and take out that previous high, I should tighten up my stop on it. So that way I'm not letting that gain end up turning into a loss. So you go through AXON. Okay, yeah, we tighten up our stops on that one. QS, I don't know why we're in it, but oh wait, that's a 5-year. Let's go back to a 6-month. There we go. QS, you've had a great run. When you saw that candle there that night, most likely that's when you tighten your stop. So that way, if it doesn't rally back the next day, you're closing out with a gain the next day. So that one, okay, tighten the stops. This, definitely be tightening up. Fuel cell, yeah, most likely tightening up stops when you notice the reversal or that doji right there, which is a weak reversal signal. Yeah, I'll probably tighten up. Mime, okay, everything looks good on that one. Just continue to let it go. Tesla started to recover. Let it go. And you can go through and just, as you can see, a matter of seconds. If you're spending more than 10, 20 seconds looking at a single graph, most likely you're trying to convince yourself of a reason to buy that stock rather than having the stock sell itself to you. And remember, the best way to invest is by using no emotion at all. Ninja's asking, what is a Titan rule? So if you're up, let's say 20%, a good rule of thumb is never give back more than 50% of that gain. So everybody's a little bit different. Everybody may be a little greedier, a little less greedier. It all depends on your personal preference. But as a good rule of thumb, anything over a 10% gain, you never want to give back more than 50% of that profit. So if you're up, let's say 20%, you would move your stop price or your line to stand up to be at 10% maximum. You may even keep it tighter than that. We saw the markets aren't looking that great right now. Maybe we're going to tighten it up to, instead of 10%, let's tighten it up to 15%. You're not trusting the markets. Things aren't looking great. Okay, so tighten it up to 15%. So that way, if the stock pulls back 5% from where you're currently at, you're locking in a 15% gain rather than letting it or risking it and letting it go down to 10%, 5%, break even, or even negative. So hopefully that helps James and also helps Ninja with that question on how to tighten up your stops. Okay, so AMD's rocking and rolling. Therefore, everything's looking good. And you can go through and quickly analyze and we're done. That was our portfolio right there. So I know, this took longer than 5 minutes to go through these, but I wanted to give you guys the explanations on all of that as well and the thought process behind it. So that way you guys can see that. But when you're doing it by yourself, you're not talking to a bunch of people, you're just quickly looking at your positions. This can literally take, if you have, let's say 10 stocks, you're spending 20 seconds per stock. That is 20 seconds every 3 stocks would be a minute. So roughly 3 minutes right there, 3.5 minutes maybe at best if you hold a portfolio of 10 stocks. There's 3.5 minutes. So we looked at 30 seconds for a quick glance on the homepage. We've spent 3.5 minutes so far, looking at our stocks. Therefore, total time right now, 4 minutes total. Well, where's that last minute? Why did I say a 5-minute plan? That is in case you need to be looking for new stocks to buy. If we go back to the homepage, we look at it and we saw, let's say that the market was rocking and rolling. The markets were looking great. The major indices were up. We were, 2-3 ticks into the green. There was twice as many stocks advancing and declining. All the major indices were in the green. There was no potential talk of inflation, no worries about bubbles, none of that. Things were looking great. Well, then yeah, that gives you an extra minute to find if you need to replace 1, maybe 2 positions that you took your profits on. That gives you that time to go analyze those. So we've talked about how to find stocks with the mobile app quite a lot here. I'm not going to get too far into it, but one of the best ways to do it is simply by using the stock pick ideas. And you can look for stocks depending on your classification of investing, whether you're, momentum trader or short-term trader, whether you're a long-term buy and hold investor, retirement invested, whether you're looking for, cyclical stocks or hot industry stocks, or you can go to the premium watch list. Here's where you can find different categories such as Midas Touch, which we've talked about before, daily boomers for you day traders or aggressive traders out there, indexed ETFs, bullish and bearish. Right now, bearish could be an interesting watch list to keep an eye on. For anybody who, wants to just buy the major indices, not really worried about individual stocks, indexed ETFs are a great way to do that. Then you come down, you have marijuana stocks, clean energy, crypto, gold and silver. So a lot of different options to help you find stocks that meet the criteria or meet your investment profile that you're looking for. All right, so that is it. That is a 5-minute plan that you can implement on your own, no matter where you are. As long as you have some sort of an internet connection, you can do this wherever you are on the go. This is exactly why VectorVest has been around for so long, and this is why the Stock Advisory app truly is the best trading application out there to help you manage your portfolio faster than anywhere else out there. Hoping they'll add ruler stocks watch list someday. So there's still a lot of updates. I know they're working on it with our development team. There's a lot of updates coming out. So someday soon, hopefully I'll be able to announce all the different changes coming out. But for now, I got to stay tight-lipped on that one, unfortunately. All right, so that's going to be it. Any questions you guys have? I know you guys had some questions on tightening your stops. Hopefully I answered those for you. Hopefully I gave you guys some new tips, tricks to help you manage your portfolio even easier. Mark's saying easy peasy. That's the answer I like to see, Mark. So if that's the questions that you guys had, let's jump into analyzing some of your stocks for you. If you guys have stocks you want to see analyzed, make sure let me know in the comments and in the chat, and I would be glad to start analyzing those for you. Also, as a side note, next Thursday we will not be live since we do have a holiday that day. So next Thursday's session will not be live. We won't be having a session next Thursday, but the week after that we will definitely be back. So make sure if you're on YouTube, subscribe to the channel, turn on that notification bell so you get notified of that. Or if you're on Facebook, make sure to turn on notifications, like the page, turn on notifications so you get updated on that as well. Also, we will be doing our Tuesday and Wednesday trading for charity event next week. So if you're sad you're gonna miss me for for next Thursday's mobile coaching session, make sure to hang out with us over on our YouTube channel on Tuesday and Wednesday at 11:30 a.m. Eastern, as we do some live trading and talk about different tips and tricks to help you manage your stocks even better. Also, at the same time, we'll be raising money for Toys for Tots, also Levine's Children's Hospital. So if you haven't followed that already, make sure to go check that out. It's an event we're doing up until the week of December 10th. And all the money raised and all the new subscribers that we get to the YouTube channel, VectorVest will make a donation on your behalf as well. So if you can't, if the holidays, this year has been tough on you and you can't donate, totally understand. I get that. All you have to do is subscribe to the YouTube channel if you're not already subscribed, and VectorVest will donate on your behalf there. So let's go ahead and start to analyze some of your stocks. Am I going to be giving a talk in Tampa? Unfortunately, they did not ask me to go to Tampa this year. I'm going to be staying here in North Carolina and holding down the fort from here. So unfortunately not, Bob. All right, Apple coming in as our first one. Let's go take a look. So Apple. When we look at Apple, or when we look at any stock, we want to analyze these 4 indicators right here at the bottom first and foremost, and this can help us get a great overall sense of what the stock is, what it's about, how it's doing. So the first indicator we look at is the RV, or relative value. The relative value is looking at the long-term price appreciation potential over the next 1 to 3 years. At 1.45, we expect to see the stock outperform a AAA corporate bond over the next 1 to 3 years here. Then we look at the RS, or relative safety. The relative safety is looking at the consistency and the predictability of a company's financial performance. The best way to think about it is it's simply an indicator of risk. So above 1 would tell us there is less risk, below 1 would tell us there is more risk associated with the stock. As always, all 4 of these indicators are going to be cast on a scale of 0 to 2, so keep that in mind. So anything above 1 is good, below 1 is bad. So 1.3, that shows less risk, which is a good thing. Third indicator we look at is the RT, or relative timing. This is the short-term price trend of the stock. Cast on a scale of 0 to 2, above 1, the short-term trend is up. Below 1, the short-term trend is down. My personal rule of thumb is anything on an RT rating of 1.1 or higher is good. 1.1 or lower is really where I start to get, where I start to do a little bit more digging and see if, see what's going on and see if I shouldn't be tightening up my stops at that point if I haven't done so already. So 1.07, personally, I'm a little hesitant with that one, but it still is in a short-term uptrend. So these 3 are combined to come up with the VST, standing for value, safety, and timing, giving you a great overall view of the stock on both a fundamental and a technical basis. So at 1.26, the stock overall is favorable on both the fundamental and a technical basis here. Let's see, few good brokerage, please. Depends on personal preference, honestly, AJ. There's a lot of them out there. Everybody has different needs, whether you need a full service broker or whether you need a discount broker. If you have VectorVest, discount brokers are definitely going to be the better opportunity because you don't need all those other services that they can provide. So it really depends on personal preference and what you need from your broker. All right, so there's Apple. Let's go ahead, take a look. Apps coming in, APPS. So apps, great long-term potential, less risk associated with it, consistent fundamentals, consistent earnings performances, but they did announce that they don't expect, or they expect a slowdown, if I'm not mistaken, in their earnings. And so that wording there, even though they've had great performance so far, it's the expectation of the future earnings that everybody is worried about. Therefore, that's why you've seen the stock drop, and now it's down with an RT of 0.64. Tells us it's not the time to be long in it. Good stock, fundamentally sound, just not the right time to be in it. Once again, even the best stocks have those downturns or even have pullbacks, which create the better buying opportunities here. All right, BXC. So BXC, you have good long-term potential, less risk associated with it, really strong short-term uptrend. Therefore, this stock is favorable still. Let's see what else we have. SKT, poor long-term potential, a lot of risk associated with it. So this is more of a speculative trade. Timing at 1.51 tells us it's a really strong short-term uptrend. So if you're a speculative trader, momentum trader, this is definitely a good favorable stock for us. Oh, excuse me. Let's see what else we have. AETUF, AETUF. AETUF, good long-term potential, a little less risk than the average stock out there. Really strong short-term uptrend. So overall, stock is still favorable. SAIA, good long-term potential, steady, consistent fundamentals, so consistent earnings performance, really strong short-term uptrend, even with the 3% pullback here today. Looking at it, if you take a look at the graph, it's gone from 300 to 360 in a matter of a few weeks, and now pulling back a little bit here today. Uptrend is still remaining intact. Overall, definitely a favorable stock. Let's see. SAR, good long-term potential, a little bit more risk associated with it though. You're in a sideways move. Overall, the stock's about average. How do you incorporate the MACD into your decision to buy, sell, or hold? So MACD can be used on a short-term or a long-term perspective. I've done a few sessions there, Todd, talking about technical analysis, timing your entries, timing your exits, where I've talked specifically on MACD. I don't have the time to really get into the full explanation again here today, but I definitely recommend go check out the timing your entries and exits and spotting your entries and exits videos, and those should help give you some insight on MACD there. All right, PLBY, Playboy, there we go. So Playboy, this is one we got into the Jockey Club a few days ago and this one is a speculative play right now. Playboy, is an iconic name, but they've definitely fallen off with the rise of the internet. And right now they seem to be working on bringing the company back to life, revitalizing the company. And so it is a speculative play. You have poor long-term potential, a lot of risk associated with it, but it's a really hot momentum play. I think coming into this end of the third quarter, beginning of the fourth quarter is definitely going to be a interesting time for him. Overall, stock is definitely favorable from a momentum perspective. AJ's asking, will VectorVest eventually do crypto analysis? I know there's talks. I know we are working on looking into getting a crypto data feed. Where that is or how that stands at this stage, that was a couple of weeks ago I heard about that. At this stage, I don't know where that is, but I know that we are looking into potential cryptos there. But I can't confirm or deny if we will or not. Extra off, alrighty. Extra off, one we talk about week in and week out. Thanks to our fan, Jay. Thank you, Jay. So with this one, you have poor long-term potential, a lot of risk. It is a speculative play. We all know that from this point. 1.19 on the RT, still in a short-term uptrend, a strong or decent short-term uptrend. Overall, the stock is not favorable. We need to see that timing pick back up. It's getting hit pretty hard with the overall market, so therefore we want to be cautious here today if you're looking at getting into it right now. Let's see. ARCB, good long-term potential, less risk associated with it, really strong short-term uptrends. Overall, stock is definitely favorable. SAIA, did I do this one yet? I don't know. Let's go ahead and do it anyways. Oh yeah, this is the one we talked about, already in a decent uptrend. Roblox, RBLX. Roblox is a speculative trade. You have poor long-term potential, a lot of risk associated with it. You have a really strong short-term uptrend though. You have a lot of momentum behind it. Therefore, the stock is favorable. AJ, as I mentioned earlier, a good brokerage is dependent on you, personal preference. There's a lot of them out there. There used to be a website you could go to that would break them down for you and what they offered, what they didn't. But it really depends on personal preference. What you need as an individual, whether you need a full service or a discount broker, whether you're looking to get into their analytical tools that they have, what type of analytical tools they have, or whether you're just looking for somewhere to make your trade and that's it. Interactive Brokers is a good one. TradeStation is a good one. Ally is a good one. TD Ameritrade. I personally have used TD Ameritrade since I started trading. I've never had any issues with them up until this year. Ever since they got taken over by Charles Schwab, their customer service seems to be going down. They seem to be having more issues recently. So I've never had anything bad to say with them up until this year. I've started seeing some cracks there, but they've typically have been one of the biggest, most common brokers in the U.S. But ever since they got bought out by Charles Schwab, I've had a little the experience has definitely dropped or noticeable drop there. All right, so that's all I'm going to say on that one. LCID for Lucid. So Lucid is a speculative play. It has poor long-term potential, a lot of risk with it, but you've had a lot of momentum coming in recently with an RT of 1.7. It's down 12% so far today. Hit a high of about 50 and now starting to pull down or pull back. And so, yeah, right now you just got to be careful with it. It's had a substantial run. It's gone from below 30 all the way up to almost 60. So it's doubled in a matter of a few weeks. Therefore, significant pullbacks. What goes up that quickly can come down just as fast as well. PayPal, PYPL. Schwab is excellent. So I also have a Schwab account. I don't know if it's a type account I have, but I've looked at their Trader Pro or whatever they call it, their real-time platform. That is nice, but they have a lot of hoops you got to go through to get onto that. And their regular trading app doesn't even update. It's clunky from a user standpoint, a user experience standpoint. I haven't been too pleased with it. I still like Thinkorswim from a mobile standpoint. Still one of the most comprehensive trading platforms out there where you can get easy to find options data, options information, stock news, all that. So I personally like Thinkorswim from a mobile standpoint. Schwab's mobile is pretty terrible in my opinion compared to Thinkorswim, but Schwab did buy out Thinkorswim, so hopefully, or buy out TD Ameritrade, so hopefully, Schwab will update their mobile app, their real-time mobile app to be similar to what we have with Thinkorswim. Just my personal experience from it though. Ninja saying TDA guy told me that Thinkorswim will become the standard for Charles Schwab. That's what I'm hoping for, honestly. That would be the best case for him there. Let's see. SDIG. SDIG is an interesting one. So this is one, there's been a lot of analysts coming out backing up the stock, giving high price targets anywhere from $35 to $60 a share. Right after they gave those announcements, the stock started dropping. Very, very suspicious if you ask me, but this, just IPO'd a week and a half ago, if I'm not mistaken, or about a month ago at this point. So it is a speculative stock. Since they haven't been trading very long, you don't have any fundamental analysis to go off of, but they're a Bitcoin miner. I like what they're doing. They're getting a lot of government subsidies, which helps boost the underlying there. So therefore, you are taking a higher risk getting into a newer stock like this. Poor long-term potential, a lot of risk. It is in a steady decline right now. Overall, stock is not favorable. I'd wait to see the stock start picking back up. I've never used Fidelity's trading tools, Bob, so unfortunately I don't have an opinion, nor do I... Oh, excuse me. Got an eyelash in my eye. Nor do I really know of anybody on Fidelity's trading tools, so I haven't ever been able to even see them or play around with them, so I don't have a good opinion on those. All right. Okay. Open, OPEN. Open. Poor long-term potential. A lot of risk associated with it. You're in a slight decline. Overall, stock is not favorable. Let's see. What else do we have? NRZ. NRZ, good long-term potential, but does have a little bit more risk associated with it. Timing is basically flat. Overall, stock slightly better than average, not by much though. SNOW. SNOW, poor long-term potential, a lot of risk associated with it. You have been in a really strong uptrend. Overall, the stock's average. With a strong uptrend with the poor fundamentals, this is a speculative trade. Be careful out there. If you start seeing the notice or the markets, let's go ahead and take a look at the graph. Based off the graph, everything's still rocking and rolling. So yeah, everything looks good with that. But once again, from a speculative standpoint, a momentum trader standpoint, User Actuary Pro. Okay, so seeing a few comments about Fidelity in there. XOP, let's go ahead, type it in. XOP for the Spider Oil and Gas. With an ETF, your RV and RS are always going to be pegged at 1. Your primary focus with an ETF is going to be RT. At 1.38, it still is in a strong short-term uptrend. Therefore, this ETF is favorable for the time being. And then we'll do one more stock here today, B2G. So poor long-term potential, a little bit more risk than the average stock out there. However, you do have a nice momentum play here. Therefore, as a short-term trader, definitely have some potential. Overall, stock is favorable because that momentum is outweighing the little bit less than average fundamentals that we've seen so far. Tell me anything good about C3AI. I've never heard of that one there, Barry. Unfortunately, I don't have anything to talk about with that one. All right, so that's going to be it for those. Let's go ahead back into the market overview. We are still 2 ticks into the red. Therefore, the color guard is somewhat bearish, and VectorVest does not advocate buying any stocks at this time. If we take a look at the color guard once again, RT's still basically flat here from where we started off at 0.94. Price of VectorVest composite still lower day over day, week over week. Buy to sell ratio 0.95. I think that still remains flat from where we looked at it, where we started off with. MTI still moving lower day over day, week over week. Looking at the advanced declines, we have seen a slight uptick. The advances were sitting at about 62 or 22% about an hour ago. Now we're seeing it about 27%. Decliners at 63%. Those were about 67%. So we have seen advances picking up a little bit, but still remaining in that 2-to-1 bias that we want to see if we're going to be looking at short-term trade or direction of the market for the day. Hey Mark, hopefully you're doing well, chilling out in Orlando. Hopefully you're having a good time in Orlando, Mark. Glad you could drop in and say hi. Snow, are you saying you'd put a tighter stop on it? No. Snow was looking good. Everything was looking good with that one. So yeah, Snow remains in a nice steady uptrend so far. Looking at the major indices, the Dow is down about 0.25%. It's come back about half of what it's lost earlier on. NASDAQ turning back into the green for now the second or third time here today. Same as the same as the S&P. Overall, VectorVest composites losses have been cut in half so far, only down about 0.3%. So maybe we're seeing the plunge protection team starting to kick in today because of the worries that we've had going on in the market here today. All right, so on that note, once again, next week for anybody just tuning in, next week we will not be live. Next week we have Thanksgiving, so we will be out of the office that day. But if you still want to see me, make sure to head over to our YouTube channel on Tuesday and Wednesday at 11:30 a.m. Eastern as we kick off Trading for Charity. We'll be doing some live trading. We'll be analyzing your stocks just like we do here at the end. Also giving tips and tricks on how to enhance your own performance. And so all at the same time, raising money for Toys for Tots and Levine's Children's Hospital, helping make this holiday season better for kids that have had a rough go at it and need a little bit of a boost here to help them out, make this holiday season the best it could possibly be for them. So any support is more than welcome. If you don't want to donate, that's fine. Neville will ask for a donation. But all I ask is that if you're not already subscribed to the channel, go over there, subscribe to the channel, because every new subscriber that we get, VectorVest will make a donation on your behalf. So you don't even have to put anything in. Don't even have to put any money in, and VectorVest will do that for you. So I wanna see us get a wave of new subscribers over the weekend, over the holiday season, especially during Thanksgiving. Tell your friends, tell your family, tell them to go over to the YouTube channel, subscribe to the channel. Don't have to turn on notifications if they don't want to, but tell them they can learn how to become financially independent through the use of the stock market, and coming and hanging out will help them get to that goal of theirs. So want to be early? Good morning, or have a happy Thanksgiving to everybody out there. Have a safe weekend if you're traveling. Have a great holiday week next week. And I will see you guys the week after next week as we kick off our next mobile stream here, or our mobile coaching session. So until then, take care, adios, and toodles.